Hi guys, welcome back to my channel. And if this is your first time here, please kindly like, subscribe, and turn on notifications so you can be the first person that's gonna receive the notification that I dropped a video and you can make good use of it. So I was not able to drop a video yesterday, which was Sunday. I said I'll be dropping videos due to one or two things. So today I'm gonna be explaining some things and I'm gonna be doing some trade breakdowns for you guys. As you all know, I make use of Msnr and CRT. So last week I did a trade breakdown of a trade I took on AUD USD. So today it is Usdjpy, and let me quickly get started with some explanations. So last week I explained to you that Msnr, basically in Msnr I'll make use of A levels, V levels, and open close key levels for reversals, right? Open close key levels are two candles of the same colors that are overlapping each other like this. So A-shaped key levels, they are bullish and bearish candle that sponsors reversals or breaks and reversals in the market she get. And V-shaped key levels, they are also bullish and bearish candles that sponsor reversals or break and reversals in the market. Likewise, this open close key levels too. So let me show you how they work. I think I did it last week too, but let me just do it again. Okay, so let me delete everything right now first. Okay, so normally I said A-shaped key levels are expected to send market to the downside or to the upside depending on the case. So this is an A-shaped key level right now. We have our A-shaped key level, our bullish and bearish candle that are forming an A-shaped key level, just like this one right here. This is it right here. We have our bullish and bearish candle forming an A-shaped key level. If you go to the line chart, you see that this bullish and bearish candle are forming an A-shaped something like A shape get. So this is an A-shaped key level right here. We expect market to come back to this A-shaped key level and then continue moving to the downside just like this. Or in another case, we expect the market to just come back to this A-shaped key level like this. Might want to come down, but it will just break past it like this. Then it will come and act as a breaker block. If you know breaker blocks, so it will come and act as a breaker block like this. Then continue moving to the upside. I don't know if you understand what I'm trying to say. So these A-shaped key levels, they are supposed to sponsor sales to the downside like this. Once they get broken, they are expected to sponsor buys to the upside. So this A-shaped key level right here got broken right here. We expect market to come back to this A-shaped key level, then retest it to the upside. Likewise V-shaped key levels too. So for V-shaped key levels, we're going to have a V-shaped key level right here, which is a bullish and a bearish candle down here. So a bullish and a bearish candle down here. This is the level. We expected market to come right here like this and do something like this, move to the upside. But then there are some cases whereby market will just come there like this, break past it like this, then come back to retest the level like this before moving to the downside. So that's just how it is. They act as breaker blocks and other blocks too. Other blocks are also for sponsoring reversals, and a breaker block is a failed order block. So whenever an A-shaped level fails, we expect market to come back to retest it likewise V levels, and what's it called, open close levels too. So let's say we have our first candle right here, we have our second candle right here of the same color, bearish and bearish, or bullish and bullish. So we have our level right here, we have our open close level right here. So for a bullish scenario, we are expecting market to come, maybe market has broken past like this, we expect market to come back like this and retest like this, go to the upside. But sometimes we can have a break of this level right, market will come right here, break past the open close level, and come back here again and continue moving to the downside. So that's just how it is. So now let me move to the entry part. So last week I explained how you can combine Msnr with CRT. I said whenever we have a level, whenever we have when we know our bias, I'll still make a video on how to get your bias. But whenever we have our bias already, when you have your bias already and you have an A-shaped level right here like this, then you have a candle whereby the low of the candle has not been swept. Let me use body. So we have our A-shaped level right here like this. This is our A-shaped level right here. And we have our candle range that has not been swept by any candle to the downside or to the upside. I told you that for you to know which candle is going to give you a range, the downside or the upside should have not been swept. So like this, now we have this candle right here and we have this A-shaped level right here. The low of the candle has not been swept and the high of the candle has not been swept, so definitely we can call this a range. So we now wait for one of the parts to be swept. So let's say we have this high swept now. Then while sweeping this high, this candle also touched this A-shaped level right here. What are we expecting right here? We are expecting an expansion to the downside, right? Something like this, to the opposing end of the candle. You get? So we have a candle range that has not been swept to the downside. Then it was swept to the upside while touching an A-shaped level right here. You get? So while touching an A-shaped level right here, and we expect the opposing move to the downside. So right here, these things are what we look for on the higher time frames. So on the lower time frames, we look for entries. So how do we look for entries on the lower time frame? There's something we call model 1 entry and ABC pattern. So the ABC pattern and the model 1 entry are what we use for our entries. So let me show you guys now. So for the model 1 entry, I'm not going to be explaining it right here because that's deep CRT. I'm going to be explaining the ABC pattern for you now. Hold on. Okay, I'm back. So I said for the entry patterns, we have ABC pattern and what do I call it? I said we have ABC pattern and the model 1 entry. So let me just go for the ABC pattern. So for the ABC pattern, once we have a scenario like this happening on the higher time frame, once we have this sweep and white touching a key level right here. So on the lower time frame, what we expect to see will be something like this. We'll have a sweep, there will be a high like this, then we have a sweep of the high, then we have a break of this low right here, a break of the key level right here, then we have our engineered liquidity right here, or inducement, anything. Then we have an entry from this QR level, this Quasimodo level, or this last extreme level, or any other key level that is around here. just like this to the downside, something like this. So this one will serve as our inducement, and there can be a Quasimodo level right here. So in scenarios there are no Quasimodo level, we can also have our other levels right here, or this even extreme level. Then we enter from here, or you can also enter from this Quasimodo level and extend your stop loss to cover the extreme high like this. You get, and to the downside, you get something like this. So for the levels that I will use for entries, Quasimodo levels. Let me explain what Quasimodo levels is for those that do not understand Quasimodo. So Quasimodo means when you have an A-shaped level behind a bigger A-shaped level. We have our A-shaped level like this. It is supposed to sponsor sales to the downside, but market broke past it once like this. Then it's supposed to sponsor another buy to the upside, like I told you earlier. It's supposed to sponsor another buy like this to the upside, but then market broke it twice, the second time again. So what we expect now is for market to come back here now to the same level and start moving to the downside. So this is what we call Quasimodo reversal, QMR reversal, Quasimodo reversal. So just like this now. So it's an A-shaped level behind a bigger A-shaped level, something like that. So I should you get like that. So another key level that we use for our entries, another key level that we can use for entry on lower time frame is the fair value gap. So we can use A-shaped level. You can just write it down. You can use A-shaped levels. You can use QMR levels. That's Quasimodo that I showed you this one. You can use fair value gaps, and we can use V-shaped levels also. So that's just it. Let me just get to the trade breakdown on USDJPY. So for USDJPY that day, my bias was still very bullish. Why? Because on this, was it daily or weekly? I think it was daily time frame. Yeah, no, it was weekly time frame. Let me check weekly time frame. Okay, it was daily, sorry. I think I mentioned something last week that when you have a candle range like this, and then the previous candles are of the same color of the candle range, you have to put your next target at the last candle that formed the range. So you get something like this. This is the candle that formed the range, and this is the previous candle before the candle that formed the range, and they are of the same color. So it is a bonus for you. Why? Because these candles are of the same color. Then your target will not be the end of this candle that formed the range again. It has to be the end of the candle that formed the end of the same color candle. So this is the candle range, and this is the previous candle of the same color. So your target is going to be this candle right here, no longer this candle. So it will be a bonus for you like that. It will be an extra profit for you. So right here we have our candle range here, and we have our key level right here that market used. Okay, we can use this V-shaped key level. So this was what I explained earlier. This is a V-shaped key level right here. Go broken. I think this is a V-shaped key level right here. Go broken to the upside right here. The market came back to use it right here. So while touching this V-shaped key level, we also swept this range. This is a candle range right here. So you also swept this range while touching this key level right here. So this is daily time frame. Let's go to let's go to 4 hours first. So on our daily time frame, we already had our bias already. we knew where market was going already. So I did not enter right here. This wasn't where I entered right here. But then let me check if there was an entry before market reached target. We already had the first reversal right here, and we know the market is heading already because the bias is bullish and we are reacting from a key level and we're also sweeping a range. So I already know that till market reach here, I will not look for any sales. I will just continue looking for buys until market reaches the target. So I did not catch this first entry. I just look for another entry on my 4 hours time frame. So let me just check if I would have been able to catch this first entry. So on daily, from daily we head to 1 hour now. So from daily we head to 1 hour. So right here, let's see what we had. Okay. So right here, what we had was not pretty. Let me use trousers. This one was a bit jiggy. Okay. So right here, what we had was something similar to ABC pattern that I explained to you earlier. So this was the level that we are reacting from the level, and this was the sweep. This was the low that got swept. And I told you that after a sweep, we're expecting a break. So I think the break happened on 1 hour. Let's check 1 hour. I'm only using 2 hours because I want to show you the entry perfectly. From daily, you have to go to 1 hour to find your sweep and break. From 4 hours, go to 15 minutes. From 15 minutes, go to from 4 hours, go to 15 minutes. From 1 hour, go to 5 minutes. So you understand? From weekly, go to daily of 4 hours. So from this is daily now, you can go to 1 hour. So this is the sweep we had now. Can you see? So we had this sweep right here now, and we had this break, this first break. What do we consider a break? To consider a break, you have to the 3 key levels that we have in Msnr now, which is A level, V level, and open close level. After a sweep of the low, you have to see market move past one of those, levels, maybe A-shaped key level, V-shaped key level, or open close level. So you have to see market break past one of those levels. So this is our open close level right here now. After market swept this one, markets came right here to break this open close level. So right there, we knew we had our break already. So we'll be expecting what? Expecting reversals. But then, in case you don't want to confuse yourself that this is in a break, so you have to wait. You can wait for the normal break of structure in SMC, or you wait for an A-shaped level to be formed and broken, like right here, like this now. So we had this sweep right here, and we have this I created. So this I created got broken right here. Can you see? So for the if the breaking of A-shaped levels, V-shaped levels, and then open close levels are too complex for you, you can just wait to see a clear break of structure, like in SMC. You can just wait to see a clear break of structure, like a market structure shift. The market was coming to the downside, or from all the way from here. So you can just wait to see a break to the upside, or if it is in a selling scenario, you can just wait to see a break to the downside. But in the buying scenario now, we waited to see a break to the upside right here, and I told you that after we see a break to the upside, what do we expect? We expect to see our liquidity, and this was what formed our liquidity right here. Can you see? This was what formed our liquidity right here. So there's something we call fresh levels and unfresh levels, but I'm not going to talk about that now. I will find another class to talk about. But let me just give you a brief explanation of fresh and unfresh level. A fresh level a fresh level is a open close level or a V shape or an A shape level that has not been rejected at all. Do you get? Like an A shape level, like we have our A shape level right here now, or let's say we have our V shape level right here now. Market has not come back to it at all. Market just went past it since a long time ago. Market went past it since a long time ago, and market has not come back to use it at all. So that means that V-shaped key level is still very fresh to use. But let's say market has now come back a few times, used it like this. Market came back again, used it like this. Market can still, it's still possible for market to come back to this level right here and still use it, but it is not fresh anymore. So the probability of market using it is very low. But for fresh levels, when you see a fresh level and an unfresh level, you surely pick the fresh level because the fresh level has high probability of market coming back to it. So the unfresh level also can be used, but we can only use the unfresh level in few cases. Maybe we don't have a fresh level or the fresh level is very far. Sure you get? So that's just it now. So in this scenario, after we had our break of structure, now we had our liquidity right here, formed right here, the first pullback. So give us the liquidity. So right here now, the level that we had this level right here, the level that was close to this sweep right here. We had this level right here that has been used to the upside, is no longer fresh. We had this level right here that has been broken to the upside and used again by this one. It's no longer fresh. But we had this level right here. This A shape, a V shape level right here, which has not been used at all. You get? It has not been used at all. And then you might be wondering that why are you not using this one right here? You can use it right here. You can use this one right here, but then you have to accept the stop loss. You have to accept your stop loss to cover this low right here. Sure you get? The stop loss, you have to cover this low right here. So that's why we pick the ones that are more closer to the sweep so that our stop loss can be small. Sure you get? So we have our level here. We can cover this level right here now. Can you see? Stop loss is smaller compared to from here. So we'll pick the one that is more closer. So our stop loss can be small. Most times, a few cases, let me say a few cases, can have our entry missed because market will just use this one. But then if this level, there are some cases whereby this level will not be far from the low that was swept here, this sweep here. So for this case, it's very fast. So that's why I just prefer to pick the one that will make my stop loss small and it's also fresh. So that's why I just used this one. So let's say this one right here was somehow closer here now. I would have used it, but it was not close. So that was why we would use this one, and this will be our entry. Then our stop loss will cover the low right here, and we target the opposing end, that daily target, this one right here, just like this. Why is it not tracking? Just like this. And this is a 10.6 RR trade for you. Simple 10.6 RR trade for you. Can you see? Can you see? Just simple 10.6 RR trade for you. The video is already 25 minutes long, and I've not even gone to my trade breakdown. Should I do it? I'll do it another time because this is already 25 minutes long. So I guess you all gained something in this video. If you did, please leave a comment, subscribe, share to friends and family, turn on notifications. Thank you all, and catch up with you later.